We're joined by Craig Leupold, President of Green Street Advisors. Craig, thank you for joining us.
Thanks for having me.
Craig, what do you consider to be the main lessons that commercial real estate companies should have learned in the past year?
I think that the main lesson would be that markets change and can change quickly, and that therefore they should be prepared for not only quick change, but maybe significant changes in terms of magnitude, both from a balance sheet standpoint and also from an operating fundamental standpoint.
And looking at the landscape of the commercial real estate market, what kind of role do you see REITs playing going forward?
Well, REITs have proven this year that they have access to capital, both equity and debt capital. So they should be the providers of, well, because of their access to capital, I think that they can play a role in helping to solve some of the pending problems that we see with real estate, that being an over-levered industry where we have a significant number of maturities from the debt side coming due, and how those get played out, whether they're extended by banks or whether ultimately banks take the properties and look to liquidate these investments, or also in a CMBS market. REITs having access to capital, I think, have an opportunity to take advantage of what should be attractive buying opportunities.
And do you anticipate a revival of joint ventures or internal funds being run by REITs?
I think we'll see that at some point. Clearly there are a number of REITs who still have joint ventures in place today and institutional funds that they need to place and buy assets. And I think we'll see it. I think part of the issue was what was stressed in terms of asset management programs or joint venture programs. But I think having access to a variety of capital sources is smart, and that's what provides REITs an advantage over some of their private market peers, where they can access the private institutional market, they can access the public market, both from a debt standpoint and an equity standpoint.
And then there's also the issue of mortgage-backed securities. How do you see the government programs like TALF impacting that market?
Well, we've seen just the emergence of TALF as helping to bring down spreads in a CMBS market, which eventually should lead to more liquidity in the market. And I think the CMBS market has been dead for the last 2 years. I think TALF is the intention there is to help reestablish the CMBS market, and I think it'll make progress in doing that. I don't think we'll get to the point where we were 05, 06, 07 when we were originating $200 billion a year of CMBS, but I think that we'll move from zero. Basically, CMBS market has been dead. It's been $0 to $25 billion or so the last 2 years. I think we'll see that increase, but I don't think we'll get back to the levels we were at 05 through 07.
All right. Well, thank you very much for your time.
Absolutely. Thank you.
For more information on this and other REIT news and analysis, check out REIT.com.